What's going on, guys? Welcome back to the channel. Today's video, I'm just going to go through a little recap of what we did when it came to individual stocks throughout this week and how exactly I trade these charts. So when it comes to like swing trading stocks or day trading SPY, I'm telling you right now, this is the easiest way to do it. It's very simple. We're not charting. All we're doing is watching two SMAs on an option chart with Heikin-Ashi candles, and we're just playing crosses and playing 50 SMA bounces. So we have the 10 SMA, which is this green line, 50 SMA, which is this blue line, and there's two kind of important factors when it comes to these charts. So the first one being is the expiration. So every week I always have a weekly contract, one for calls, one for puts on whatever stock I'm watching, and then also a monthly contract. So if you go on the option chain on Thinkorswim, you could literally see on the option chain that all of them say weeklies except for one of them on the option chain, and that's the monthly contract we use, and we always use it for the following month. So for right now, for the monthlies, I'm on the October, I think it's the 17th contracts, I believe. So we have those on my watch list every day, and then we also have the weeklies on my watch list every day. The weeklies is on a smaller time frame. We're watching the 30-minute, and then we also use like the 1 hour, 2 hour, 4 hour just for confluence. But the main time frame is the 30-minute chart when it comes to the weeklies, and then for the monthlies, we use the daily time frame for the most part. Sometimes I look at the 4 hour, but the main factor is the 4 hour chart or the daily chart when it comes to the monthlies. So how I kind of play these is when it comes to the monthlies, the most important thing is the daily time frame crossing. So you can see what happened here on MU. The monthly chart that I had on my watch list. So all that happened here was this 10 SMA cross to 50 here on the monthlies, and you can see the type of move that's generated when we get this cross. The daily cross on the monthly contracts is probably one of the most significant things that could happen on a stock, and this is where you get those continuation moves from. You can see 10 SMA went above the 50. On MU, we got green day, green day, green day, green day, green day. And when you're playing this type of cross, your stop loss is always this 50 SMA. The 10 SMA could be your trailing stop because a lot of the times when we do get a cross, maybe it'll get some sort of pullback to the 10 and then trend higher, and you could just use that as your trailing stop. This is exactly how I do it when I day trade SPY. It's the same thing, just on a higher time frame. But you can see, again, this 50 SMA will also act as strong resistance when we do either break below it or we're under it. So you can see the first time we hit the monthly 50, it didn't break and didn't cross, so we didn't get the continuation move. So back in here, it finally ended up crossing, and look at the move. These contracts, let's say you entered at like what, $2 a piece maybe on these contracts. Okay, if we're playing conservative, maybe 328 was the day it actually crossed and that 50 SMA was flat or curling up. As you can see right down in here, you cannot take the cross when the 50 SMA is sloped down. So it probably took a little bit to cross. I highly doubt it crossed right here. So most likely on that 910 candle was the green light to go long on this. And let's say you entered at 323, maybe at the close of the day, and look at the move. I mean, these went all the way up to $17 a piece. I mean, this is where you can catch really strong moves, and you don't really have to do much. You just watch this daily chart and just play like a month or two out expiration and just chill. Wait for the stop loss to get hit, either closure below the 50 or you just hold it. And this is, in my opinion, the easiest way to swing trade because it's very clear on where you're selling and it's very clear what the trade is. All you're doing is playing this cross of the 10 and the 50, and it's just a waiting game. You just hold and hold and hold either until this 10 SMA breaks or you get stopped down on the 50 and just scale out along the way. I mean, typically I'm holding my trades 50 to 70% before I take any trims, so that's usually my trim area, 50 to 70, and at that point stop loss goes break even, or you could just trail this 10 SMA with whatever you're up. But I mean, when we get these daily crosses, I mean, a couple 100% really isn't that crazy because it happens so often. I mean, these contracts went almost 10x. So, I mean, a couple 100%, it's a pretty common move when it comes to the daily crosses, and that's why it's very significant when we do get the cross because a lot of explosive moves happen on this daily time frame, and that's why I always have this on my watch list every day. But when it comes to, I wish I had the 30-minute chart pulled up here, but I don't. But yeah, that's pretty much how you play the daily cross or whatever. I didn't take MU. I saw this too late and didn't get an entry on it. But I will go over something that I did take this week. Let me see, what do I have here on the watch list? SoFi. This is something that we took here. So SoFi, very simple. 10 SMA is above the 50. This 50 SMA is a little weird because it kind of just was on the chart. There won't always be a 50 SMA on the monthly contract when it comes to the daily time frame. And it's just how it goes sometimes. Like for some reason there's not a 50 sometimes, and at that point, I'm not trading that stock when I don't see that 50. But again, SoFi, great example. I made a video. I've been talking about SoFi for a lot recently. You can see what happened here. Once that 50 SMA was, on the chart, you can see that every time we dip down to it, what happens? Dip, get spot, dip, get spot, dip, get spot, and we finally got back above the 10 again, and look at the move we got. We pulled back to the 10 SMA, held it, and saw the continuation move. You hold as long as this 50 SMA is held, and look at the move. I mean, I had October contracts. I still have October contracts for SoFi. I have the 27.5 calls, and those are deep in the money at the moment, and it was very simple. We ended up on Friday, I took this. So on Friday, that was right here because I saw, okay, we're at the daily 50. Risk to reward here is through the roof. And I grabbed October contracts and look at the move. These are up, I mean, 664 all the way up to 182. I think I have October 17th. So I have the 27.5. Obviously, these ones were more out the money at the time, so these ones moved a lot more. I had the 27.5, so I think I'm up like 65% at the moment on those. So I already took a trim, and I'm just riding the rest to, we trail this 10 or get stopped at break even. But I'm just trimming along the way. In SoFi, it's a really clean chart. All we're doing, like I said, we just saw this chart was already crossed, so there's going to be two scenarios where you're playing the actual cross or you're just buying the dip at the 50 SMA because that is a strong area of support on the chart, and these are significant areas where you want to buy at. So every time we came down to the 50, we bounce, and finally got the continuation move. Sometimes it will take a little bit to play out. I mean, once the 50 appeared on the chart, I mean, we came down to 50 of like a lot, actually, 1, 2, 3 times, almost 4 times right there. So just play the chart, wait until your stop gets hit, or wait until your TPs get hit. It's pretty simple. But SoFi was a great one. I was talking about this last couple days in the Discord, and we finally got that leg up on Friday. 10, this is another really good looking one that I like and I'm currently in. I mean, 10 SMA crossing the 50 here. The monthly chart is just crossing, even though 10 has been ripping a lot like the last couple weeks. It's still just getting started. I mean, 10 SMA is going above the 50 here. Pull back to this 10 SMA, that could be your entry point, stop loss below the 50, or you wait for the 50 dip. Only thing about the 50 dip is that it's not guaranteed that we're going to get it all the time, because usually when we initially cross, I'd say it doesn't get that pullback right to the 50. It just really depends on how extended the move is to the upside when we start to cross. So, you could take some at the 10 SMA, and if we start to bounce to the 10, you could honestly just scale in some more once we start to bounce and get a green candle, and you could either just trail the 10, hold the 50 here. It really doesn't matter, all up to your risk. But that's why when you're playing this daily chart, you want to go further out expiration, because you need some time on your hands for it to actually play out. Because we pull back to this 10 SMA here almost on this day. We pulled it, we actually hit it right here on 916, bounce again off 917, starting to bounce 918, 919 we're starting to bounce. So that's why having a month or two out expiration is the best way to go with these, because you will need some time for it actually to play out. And if you're trying to catch a big move anyways, then you're going to want to hold this for a few days anyways when we, bounce off the 10, get the continuation of the move, new highs, and, you're going to want to contract further out. So then, obviously you can hold a bit longer. But 10, it's the same concept. 10 SMA crossing the 50, and it's a beauty looking chart. I mean, there's really nothing else to say. PDD, this is another really good one that I like. You can see here, 10 SMA is going above the 50 here on the monthlies. The strike's probably going to get changed because I'm not sure what it's at right now, but it's the same thing. 10 SMA is crossing the 50. We won't, obviously there's gonna be times where it doesn't play out. Like right here, you can see obviously this did play out, but you can see we pull back to the 50 here. 50's up. Your entry is probably on this day right here, and let's just say 366 is your fill, playing it conservative, and these went to 945. Stop loss break even at that point, and you would have been stopped on this day, or you could wait for the closure below the 50, and you would have lost 20% if you trade these exact contracts. So I mean, the risk to reward on these trades are through the roof, because we hold the 50, okay, you're good, and you get a couple 100%. If we lose the 50, okay, worst case scenario is that it just destroys the 50 and you're down like 50% in a day. And once you're down 50%, at that point, I'd be cutting it. If we're below the 50, you're down 50%. There's no point in trying to hope that's going to pop back up at that point. But still, the risk reward on these trades are through the roof. Again, we're just playing 2 crosses or 2 SMAs crossing, and PDD is one of those that looks really good. And this is actually something we took this week. So I'm going to pull up this chart right here, and here's an example of how we played the Friday contract. So last Friday, PDD, this is not this recent Friday, the previous Friday, we swung this into last week. So why? One being this 30-minute chart here. And I don't know if I have the daily chart pulled up. I don't. But again, I think we were starting to break above that 50 SMA on the day before Friday or 9:15. Yeah, so this green candle right here, that one before this other closure above, is, I'm pretty sure that was Friday, and you could see we're starting to break above the 50, and then this 30-minute chart was already crossing here. So this is where I use the weekly chart, and you could play shorter expiration when it comes to the weekly chart because it's a smaller time frame. On the smaller time frame, PDD is flipping bullish, so we know this because the 10 SMA is crossing above the 50 here on the calls, and you buy the dips at the 50. So I went long on PDD. This was right at the close on Friday, and look at the next day. Bang. I mean, it's just so clean. These contracts were up a few 100% off the open, like 200% probably off of open, and it really doesn't get easier. 10 SMA above the 50. We are above the 50. You buy the dips at the 50. It's bullish. If we close below, you sell. And what happens? We don't close below it. Next day, absolute gap up on PDD, and the contracts are up like 200%. That's where you utilize the shorter expiration when you play the weeklies. When we're playing the monthly chart, go a little bit further out expiration. Usually when I'm playing the 30-minute chart, I go with the nearest Friday expiration because I know that, this stock, since it's on a shorter time frame on the 30-minute, I'm expecting to move within, a day or two when I, take an entry point. So, going further out really doesn't make that much sense when you're playing the 30-minute because you're just going to miss out on the upside when you're playing this, because if you had further out expiration, these contracts wouldn't have been up as much. And at this point, this is your best risk to reward bet to go with the shorter expiration, because if it's not going to bounce here, we're not going to get the move. So it bounced right there, close expiration is up a lot, and you're paid. So pretty simple. And this is the PDD chart. Like I said, I just went over on the monthlies. It still looks really good for higher. I'm expecting this dip to get bought up as long as that 50 SMA holds. You can grab this for a swing if you want. I'm just giving you guys free game right now on a bunch of swings that I've been watching, and you could still get in on. But I already play PDD, and I'm still in my swing for it. So yeah, the chart looks really good. And this is a trade that I did take, was a loser on coin. I gave this in the free Discord to watch for it because, again, 30-minute chart, 10 SMA is about the 50. And you could see every time we hit this 50, we got bought up. Unfortunately, the time I bought it, it ended up breaking below it. But I still like the chart. Bought the dip at the 50. I ended up stopping out at not break even. I do think it was break even because I ended up buying somewhere near the 50, and then I added some more at the 50 because I wanted to get some more size on. But we closed below the 50, and then I ended up closing it somewhere down in this area for a small L, close to break even, I believe. And then once we got back above the 50, I'm like, okay, it's probably gonna rip now. So I got back in, and we got a little bit of a move higher. But at this point, the 50 SMA just looks so weird. It's like pointed down. So when we're playing the 10 SMA, 50 SMA cross, or just buying the 50 dip in general, we need that 50 SMA to be curling up. And I didn't like the look of this at the close here, 354, 5 minutes before close. So I ended up just selling this for 7% in profit. So between those two trades, I was like small green. But yeah, I didn't like how the SMAs looked. I got out next day and ended up pumping higher. But is what it is. Didn't like how it looked, so I got out and just respected the rules. But another trade we took, BMNR. This was actually a loser, so I bought this dip at the 50, and then we ended up getting a little bit of a bounce here at I think 140. So the trade was up like 40%. Not what I'm looking for though. 50 to 70% for my trims, and we came back down and ended up closing below the 50. And I think we exited this maybe for like a 20% loss. It wasn't anything crazy. 20-25%. Those losses I could deal with just because when we're getting those winners of 50 to 70% for the first trim, and then over 100% for on the rest of it, taking like a 20-30% loss, that's nothing compared to what the winners provide. So that was a loser we took. JD, been talking about this one for a while. Post this one in the free Discord as well. It's taking its time. It's, again, you need some time on the contracts you're trading when it comes to the monthlies. So 10 SMA is going above the 50 here on JD. It looks really good, and I'll pull up the chart right now what it currently looks like. But I was up like 40% on Friday on this trade. And if we pull up the chart here, I think I already have it pulled up here somewhere. Let's see, JD, where we at? And yeah, okay, so you can see here, daily chart looks really good. 10 SMA is going above the 50 here. I end up adding some right here at the 10 SMA. I could actually show you guys the exact ad because I sent it to the Discord when I added, but it was very clean, very good entry to take. If I could find this, I did say I was adding on it, but yeah, okay, here it is. So 10 SMA is going above the 50. We got this little pullback here to the 10. I added some more to this. This is a very high conviction trade for me, so I do really like this. And it looks really good for higher. Contracts end up pulling back a little bit on Friday. I think I'm like break even on this at the moment, but again, it's a very clean chart. We're just getting this monthly cross. If there's any dip, I'd expect it to get bought up. and I'm holding this as long as this 50 SMA holds, and we just wait. I mean, that's a simple thing. We just buy the cross, add it to 50 maybe, and just hold it until our big move happens, or we stop out below the 50. So very simple. It's the same type of trade for every single chart pretty much. But I'm trying to see what else we got here. Yeah, Amazon was something I took. Ended up stopping break even on this. I entered somewhere, I think at like 280, I believe, and I just didn't like how this gap looked. So when we did get the cross, but at the same time, there's a big gap between where the price was and where the 50 SMA is. So when we have this large gap, I'm like, okay, I don't really want to hold this until we hit the 50. It's a chance it does pull back first. So I end up selling this, and we also were at like heavy resistance on the higher time frames on the 1 hour, 2 hour, 4 hour, daily. So that's kind of how I use the higher time frames, is when if we're sitting at like all those 50 SMAs on the higher time frames, it's not something that I'm really that confident in. So I ended up selling this for right around break even, and then it did actually end up pulling back and actually breaking below the 50. So it was a good call by me. Didn't really want to take that risk because of all the resistance we were at. So break even trade on that. MSTR, I went over this, I'm pretty sure, in maybe the last video or video before. Simple. We're on the 30-minute chart here, so closer expiration, 10 SMA going above the 50. I end up longing this, I believe, at the close. I forget what day it was, but we ended up buying on this candle right here the day before. So we end up swinging this the next day. Looked really good off of open. We were up like 40%, and it came back down and hit my fill, and I got out at break even. So again, that's going to happen. You're not always going to hit that 50 to 70% mark, and if it doesn't, I'm good with that. I didn't really want to flip red on the trade after being up like almost at my take profit. So move my stop loss break even, got stopped at even, can't really do anything about that. But yeah, MSTR is what we took. And then SoFi, I mean, this chart, like I said, really good chart that we had going into this week, and we got the continuation move on Friday. And like I said, I'm still holding this, still looks good. And yeah, we're just going to ride the wave, stop loss break even, and let that be that. But those are some trades that we did take throughout the week. And that's pretty much how I go about reading these charts. It's simple, man. All you got to know how to do first is know how to pick the strike and know how to pick the expiration. Expiration simple. It's always the nearest Friday expiration, and then the monthly contract daily time frame. So 30-minute for the weeklies. I still use the 1 hour, 2 hour, 4 hour daily for those, but the main time frame is the 30-minute that you want to be looking out for. And then I just use the higher time frames to kind of give me more confluence within a trade. If we're sitting at like the 4 hour 50 or the daily 50 on the weeklies, then maybe it's not the best trade to take. But if we have all those time frames crossing at once, and we also have the monthlies that look really bullish, that's where the A+ setup comes from, and that's kind of how I utilize those higher time frames. And then for the strike price, I'll go over it really quickly. You use Monday's open every day, or not every day, every week. You use Monday's open only when it comes to picking the strike. So Monday, you use the Monday's open from Monday to Thursday. All right, so you use that contract you pick on Monday from Monday to Thursday, and then on Friday for the weeklies you repick them, because the current ones are 0DT. You don't want to be looking at the 0DTs on the 30-minute when we're on Friday, because you want to be using the next Friday's expiration, so that we can kind of see what's going on a larger time frame basis, and not that 0DT contract, which is, it's not going to tell you anything, because it's 0DT. Data is going to kill the contract, and we use that following Friday. And then for the monthlies, you only pick them on Monday. So you update the strike every Monday for the Octobers, every Monday for weeklies, and then for the weeklies, you use them Monday to Thursday, repick on Friday, repick on Monday, use Monday to Thursday, rinse and repeat. So that's how you pick them. And then for the strike price, you round to the nearest fifth dollar. So wherever we open at on Monday, you round that to the nearest fifth dollar. So let's just say we open at 121 for a stock. Okay, that rounds to 120, and then you add 5 for the calls, 125 calls, minus 5 for the puts, 115 puts. So that's how you go over, or not how you go over, that's how you pick the strike price when it comes to stocks. If it's a cheaper stock, then I'd say just go like a strike or two out of the money then at that point, because some stocks are a little bit cheaper that you can still play the system on, and going $5 out of the money sometimes is like 10 or 20% of what the stock's currently at. So at that point, just go a strike or two out of the money when it comes to the smaller stocks. That's just how I go about doing it, and how I pick the strike, and that's just how you trade the system. I mean, it's very simple. You just gotta know, again, first the strike, expiration. Once you got that down, okay, how do you take the trades? What contract should I be watching? Okay, 30-minute time frame for the weeklies, daily time frame for the monthlies. Monthly crosses are very significant. 30-minute crosses also work. So yeah, it's kind of a rundown on that. But that's pretty much all I got. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. But yeah, I'm out. Peace.